Retail landlord Hammerson today warned it will cut its 2020 dividend as losses mounted in 2019 after almost half of its tenants renegotiated their rents in a tough year for retailers.Read. Hammerson expected to slash dividend amid high street woes. The figures the real estate giant sank to a £573.8 million loss for its latest financial year, up from £173.3 million in 2018. While occupancy rates stayed at 2018's 97.2%, almost half of shops occupying spaces had agreed company voluntary agreements, CVAs, that meant they were paying their original rents. That saw net rental income fall 11.2% to £308.5 million, down from £347.5 million the year before. That meant investors suggered a 75.2p loss per share, more than triple 2018's 22.2p loss. Hammerson stuck to a financial dividend of 14.8p per share and a full-year dividend of 25.9p to keep them in line with 2018 returns. But it forecast a lower 2020 dividend of 14p per share as it continues to tackle its mountainous debt pile. Over the course of the year, Hammerson slashed net debt 27% to £2.8 billion, fueled by disposals amounting to £975 million, far above a targeted £500 million. Those included the sale of 7 retail parks for £400 million. Why it's interesting. Read more. Intu. Shares plunge after Link pulls out of landlord's £1 billion emergency cash call. Hammerson revealed that while occupancy rates stayed flat on 2018, 48% of tenants renegotiated their rents to their original levels amid the ongoing malaise in the retail industry. The focus for the 2020 financial year remains reducing debt and strengthening the balance sheet, while the backdrop for UK shopping centres in particular remains difficult, said broker Liberum. But continued disposals, while necessary, will result in a lower income yielding portfolio, with a potential higher capex requirement as the industry becomes more competitive to sustain structurally declining footfall. It comes as Hammerson's rival, Intu, saw shares plunge after a shareholder backed out of the landlord's £1 billion emergency cash call earlier this month. The fall wiped almost £70 million off Intu's market cap as traders saw it as a lack of confidence in the shopping centre owner. What Hammerson said. Read more. Hammerson sells 7 retail parks to Orion for £400 million. Chief Executive David Atkins said, "We have taken decisive action over the past 12 months to reduce debt and significantly reshape the portfolio. Against a challenged retail and investment backdrop, we have exceeded our 2019 disposal target, exited the retail parks sector as we said we would, and reduced debt by a third. This delivered nearly £1 billion of transactions in the process. With the outlook for the UK retail market remaining uncertain, we believe we should maintain our focus on reducing debt during 2020. In strengthening our balance sheet further, we will create a more resilient business and also generate significant liquidity which could." For more on this story, visit the news article link.